Well, Jonathan Barratt is joining in. Thanks, Manisha, for giving us an update on that. Jonathan Barratt is the CIO at Probis Securities. He's joining in now. Jonathan, welcome to the show. So, as Manisha was talking about, the China GDP growth that has come through at about 4.5% has given rise to a lot of expectations of higher demand across the commodity space, across, the world of crude. Do you think it can take crude prices higher, maybe above $85 a barrel as well? On Brent, that is. Your thoughts?
Yeah. No, that's okay. Brent's all right. No problems there at all. Look, I generally think that overall it can, but at the moment the market is focused on increasing interest rates in the States and also that potential for a recession. So I guess when we look at it, it's great to see what China is doing, and the forecasts Q3, Q4 are for prices to move higher for crude. But at the moment, when you actually look at the market and where it is, the market's purely focused on those rate rises in the States, which we're going to get, and the possibility of a recession. Remember, company earnings in the States haven't been that good. We've just had a few, and they've been on the negative side. So as a result of that, we could see some slip up in demand, which will force prices lower.
Hi, Jonathan. Besides crude, let's focus on some of these metal companies. We've got Alcoa's numbers earlier today. They don't give much of an outlook. Earlier, they used to at least give a bit of an outlook, which we could have some read-through out there. There's a sequential improvement out there, and prices have risen quite a bit on a sequential basis. What's your view on some of these commodities, namely aluminium? Do you think it has more legs, and copper as well?
Oh, look, I think it does have more legs. I think when you look at that, those commodities that make up the bulk of the economy and the inputs that are required, you can still see that there's healthy demand for them. I guess just recently we had with Rio Tinto's export numbers out of Australia for iron ore, actually were up 16% from the previous year. So commodities and demand for metals and other commodities is picking up. The question is for really much for how long. When I do look at, say, aluminium and copper, I can see that there is still this tightness in supply, and that tightness in supply is forcing the cash rates higher, but the more longer term they're coming up. So both the markets tend to be in more of a backwardation. I know copper's in a heavy backwardation, and that gives us a sense that we think it'll alleviate down the track. But at the moment, there's tightness around the commodities, which is keeping these prices relatively stable, if not just marginally elevated.
Got that. Jonathan, steel, where do you stand on that? There were some reports that... sorry, go on.
So go ahead.
No, there were some reports which basically suggested, there was Chinese media suggesting that there could be production cuts out of China in H2 of this year, which means lesser steel out of the country, maybe support for prices elsewhere. But I don't know, what's your view?
Oh, look, I generally think if you're talking China, you're talking about an economy that's been stimulated and continues to be stimulated. And the PBOC has continued to say it'll support these industries. We have seen before in the steel production, there are some pollution issues. And every time we see that comes to air, then all of a sudden we see there's a little bit of a bump in terms of pricing. When I think of it, if you still have this massive infrastructure needs, I think comments like that suggesting that they're only really trying to get prices lower because they really actually want to try and buy it cheaper. So it's more persuasion in the market to see steel prices come lower because eventually they actually know that they need it going for the Q3, 4 and onwards because they're stimulating that economy. If you stimulate that economy, you need imports. So I think it's more persuasion, trying to get prices lower so that they can then get pricing or get commodity at a good price.
Okay, we will leave it at that. Thanks a lot for joining in and giving us a quick take on the world of crude. But let's get back to the markets now.